Thank you guys for joining us. Really appreciate it. By way of introduction, my name is Cam Nili. I am currently an Accenture Senior Manager. That's from the Digital Currency Strategy practice. Really excited to be here. And for the past couple of years, I've been spending my time studying CBDCs for multiple organizations, including the DDP and the World Economic Forum. So really excited to be here and facilitating this conversation, which has a CBDC focus to it, unsurprisingly. And I'm here joined by Steve and Tom. And I'll ask Steve if you want to introduce yourself and give us a little bit of background on Kaleido.
Yeah, thanks. Great to be here, Tom, especially doing this with you. So Steve Cerveny, my background's in kind of like core transaction processing, distributed systems, middleware with a focus on emerging tech, and I've been focusing on blockchain technology specifically since 2015.
Good. Hi, and I'm Tom Zschach. I'm the Chief Innovation Officer for Swift. I've been in that role coming up on 4 years now. It's been a really exciting 4 years, very, for everybody, I think, not just for me and for Swift. And a super interesting time in the market, as with the emphasis of improving, the performance and making things better, for what we've done for 50 years now with cross-border payments and securities processing and foreign exchange transactions, but also the creation of new digital assets. And we started looking at CBDCs, and we're going to talk more about that today. But it's a really interesting area, and I think there's a really important role for Swift to play to help facilitate the creation, the adoption, not the creation, the adoption and kind of the smooth running of digital assets, including CBDCs.
Yep, and I think that's incredibly great because, as we all know, those of us that work in the regulated financial space, having participants like Swift, who's clearly a leader in many ways in terms of moving money around the world, having them involved and being able to participate in some of the experimentation alongside a Kaleido, an advanced technology provider, I think is really telling about where the space is headed. So with that being said, Tom, I wanted to maybe ask you a little bit about the objectives of this of the most recent program, the CBDC Sandbox, which is what we're here to discuss. The objectives of what was phase one, which wrapped up earlier this year, and there was a report that was published, and then also how that ties back to Swift's business model.
Yeah, and I think it's a really good place to start, and many people know what Swift is and what we do, but I think just in terms of providing the context and maybe a refresher reminder for people, we're the largest secure financial messaging network in the world. We could connect over 11,500 banks and financial institutions, and we're connected to over 200 countries in the world. So we're really kind of the way in which value moves around the world. And as we see this kind of evolving area with digital assets and CBDCs, and Swift has no advocacy position and has no kind of desire for the creation or not of a digital asset, including a CBDC. But the approach that we took is, if and when it happens, and it looks more likely it's a when, not a if, what do we do and how do we position ourselves to help our community? And how do we take advantage of the things that we've done really well in the experience, the operational excellence that we've built, the experience, the trust that we've built? How do we help our community is really the way that we looked at this. And when we spoke with a number of the central banks, we saw lots of different objectives for policy, domestic policy, and for monetary policy, for example. We saw very different objectives in terms of the policies, whether it's financial inclusion or improvement in the performance of market infrastructure, for example. So when we looked at this, we said probably the best thing for us to do is to go back to what we were designed to do in the first place, which is to connect domestic payment systems that didn't talk to each other and connect them together to remove friction and to facilitate cross-border payments. And we that's what we do. Interoperability is kind of in our DNA. It's what we do every day. And we looked at this and we said, we obviously don't have any control on how these assets are going to be created. The networks are going to be used. Some central banks were looking at distributed ledgers or blockchain. Some were looking at more traditional centralized technology. So we've taken a very kind of agnostic approach to CBDCs, and we focused on interoperability. And what we did is we did a bunch of research and experiments on that. And at the beginning of this year, so 2023 has been a pretty busy year for us. At the beginning of this year, we published those results and we invited banks and central banks to come and comment on what we did. and what do you think, and does this resonate, and are we moving in the right direction? We've kind of done as much as we can do on our own. Now we need to kind of leverage our community and take advantage of our ability to coalesce and bring the industry together to solve, the next new thing, right? Which is certainly CBDCs falls in that category. And so we got really good feedback on it, and they said, well, and we built a beta. Beta is probably pretty generous. We had something to show them. We published that report, and they encouraged us, said, this is great. We want to work with you. We'd like to give you some feedback, like you to help develop it. Now, I think another thing that's really important to recognize here is there's different ways of doing things. And again, it's not really our decision on how that's going to be done. The question is, how can we help, and how can we assist, and how can we avoid future scenarios with fragmentation? And so the BIS, very helpfully, a little while back, a couple years ago, I guess now, published kind of 3 different models. And what we started to look at, and the solution that we were working on, and the beta that we started with our banks, is really the interlinking model, or pretty closely aligned to what we call the BIS model 2. Now, obviously, there's a lot more of discussion, even recently, around the unified ledger, which is kind of the model 3 for BIS. We're involved in that as well. We work with the banks. We've been participants in the RLN network. We welcome participation in these other initiatives that are being kicked off now in Singapore by the IMF, by the BIS. We'd love to be involved in those things, and we look forward to doing that. But what we're talking about here, and what we set up for the banks, is really around Model 2 and the interlinking model. So how do you connect new digital networks, regardless of the underlying technology that's being used to build that? How do you interconnect and provide that connectivity back to not only existing payment rails, but other new networks as well? Because everybody's not going to come in and kind of launch their digital version of the currency on the same day, right? So there's got to be some bridge, and there's got to be some way to be able to connect them back and forth. So we were strongly encouraged. We built a beta of that. We're actually in the second phase of building this. And I think the approach is also very important to discuss here, because we want to do this innovatively, right? We want to move fast. We want to learn. We want to do it responsibly, but we want to do it in a way where we can move pretty fast. We can make sure that we keep running at the same kind of high standard that we always have. So we did decide to build the sandbox to partner with to do that, and Steve can talk more about that. But we thought that was a good way for us to learn, explore, and really help the industry figure out, in this particular case with the interlinking model, how would this actually work, starting with cross-border payments and then eventually moving into other use cases, which I think we'll talk about as well.
Yep, and that was an incredible set of business requirements that we can all learn from. And I think the million-dollar question that everybody has now is, how did we deliver upon those, right? How did we provide the platform to be able to demonstrate the value, or to demonstrate how this would work, right, in a future world? And I think importantly, what Tom mentioned is this notion of interlinking as BIS Model 2 of interoperability. How did that play out from a design perspective, and what were some of the lessons learned that you guys had?
Yeah, I'll jump in with a few thoughts on that. So first of all, just on the practical side of running, the first phase of the experiment last year, and then the second phase, which is ongoing now. Those of us who, I'm sure many of the people listening now, have been in the space for a while and have seen the sort of the overall arc and progression of the technology, where in the early days, it was very slow and very expensive to do projects, even if they're proof of concepts that ultimately get thrown away. And what has happened on the technology side is the cost at the end of the day, sort of the barriers to entry to doing projects that are exploring the sort of things that Swift wanted to explore. That cost has come dramatically down. And so we kind of talk about that from a technology perspective, like there was a Gen 1 way of doing this, and there are Gen 2 systems and platforms that are available, starting with sort of established open source tools and technologies that you can pull off the shelf. So, in the case of Swift in phase 1, some of the technologies like Hyperledger Besu that were leveraged could easily be pulled in. Fireflies and other technology. And so, starting with that foundation, and then at Kaleido as a technology vendor, bringing a degree of automation, tools, scaling around that to make it a lot easier. And I think at the end of the day, the so what is so that the technology can get out of the way and you can focus on the actual business applications and the business use cases. And I do think it's really important what you're saying in your question. What was the goal? Like, what was the mission as far as what do you want to get out of the experiment? Because if you're doing something that's ultimately not rolling into production, it's a simulation, it's an experiment, whatever you want to call it, you do want to make sure that the architecture of the thing that you stand up enables you to actually test the things that you want to test. And I think in Swift's case, because they're so uniquely positioned, as Tom was describing, as a fairly neutral entity, a nonprofit collective, you have this broad set of participation. And I think that's pretty unique, really, from what we've seen in these experiments. And so the simulation then, there is a fair degree of complexity in what gets stood up, because you really are building out, like if you want to test a decentralized sort of interlinking model, you need to stand up a lot of technologies to simulate, hey, here's country one, here's country two, there's banks on this side, there's banks on that, like that's just sort of the real world. And so, one of the things that I think was really successful about the first phase, and then sort of doubling down on that in phase two, where it's now twice as big and 4 times as many use cases, is the way that we could partner on the technology front to take that out of the way and to deliver a degree of quality in the experiment to where you could actually drive at those use cases.
Yeah.
I would just build on top of that with saying that a lot of times when you partner with somebody, a software vendor, whether it's on-prem or in AWS, as in the case here, it's standing up the technology, but it's also the integration piece. So if we want to be specific here, the integration and the way that we've set this up and the assumptions that we've set up are based on the evolving standard that the industry is moving to, which is ISO 2022 messaging standard. And Swift's helping the community bring that along, and the high quality data and the better quality data, to remove friction. That's an assumption, part of what's being built in. That has to be built in the sandbox. We've connected that to a new platform that we launched this year called the Transaction Manager, that really allows Swift to move beyond kind of our traditional messaging and what we're known for, into really being able to orchestrate transactions, end-to-end, data privacy, no data loss, right? So the components that we have in there in the sandbox, in addition to standing it up, it's actually being integrated with, and for the tests and for the experiments and for the use case to work with, is the latest and greatest technology that Swift's made available and working with the industry on anyway. So there's a real kind of momentum that goes along with that. We're not just carving something out to run some innovation theater and to write a paper and to look clever. We like to do that. That's, sometimes there's a place for that, but that's not what we're doing here. We're standing up real experiments, with the technology. That's the future of Swift. And that's all baked in there. I think that makes the work that we're doing that much more meaningful. And it also kind of paves the way where people can see that what we're doing is actually using the new technology, the new platforms that we're rolling out, the new standards that are being adopted by the industry in the experiments for the future. And I think that's a really powerful momentum that should be highlighted.
Yeah, and when we were speaking at lunch, one of the pillars of this entire effort is to prove out interoperability, really establish interoperability. I mean, Swift is the global leader in achieving this ambition of interoperability around the world. And so you mentioned ISO 222.
Yeah.
Obviously, clearly, industry adoption is growing very rapidly, and a lot of people are making investments to make sure that their messaging formats are standardized and therefore creating harmony, right? One of the questions that I had is, in relation to these new rails that are being introduced and existing standards that are being implemented, how do either of you see that the reconciliation between standards being implemented today versus what could be possible tomorrow on new rails? Like, how might these standards evolve over time, given the insights that you've had?
Yeah, I mean, one of the benefits that Swift brings to the industry is standardization. We know what a payment, everybody in the world knows what a payment looks like. And by moving to the new ISO 2022 standard, that data gets richer, and that improves the data quality, and then you can do even more with the data, right? Whether that's improving your operational efficiency inside of a banking operation, or the way in which we collect context on our network traffic. So there's really kind of multiple benefits for everybody that's involved with the network effect here. And so one is, and that's been agreed upon, and that's been kicked off, and industry's on their way in doing that. We're assisting in helping that become a reality. But we also standardize and do a change and update our standards every year. And starting 2 years ago, we began to adopt the standard messaging at Swift to accommodate digital assets. And so we don't know exactly what that looks like. It's a journey, and you can kind of upgrade the standards, as they're evolving, as we see opportunities, as we take feedback from our community. But we have this mechanism to evolve it constantly. So again, there's no kind of special moment where you just flip the switch and we're all on the new standard. There's a lot of work to get there, and there's a lot of attention that needs to be paid to, the operational excellence that needs to be maintained as you do these transformations. But it's also something that fits really nicely into an evolution process, which we have and have been doing for years. So it actually fits in really well to what we're doing.
Yeah, just to add a couple of thoughts on interoperability. Kaleido is a technology company, so we're not sector specific, although quite a lot of what we do is in the financial services space. And I've observed on the interoperability, just that sort of loaded phrase before. We literally went to a healthcare conference 1 week, and interoperability was the biggest topic there, right? Then we went to, Sybos. A couple weeks later, interoperability was the biggest topic there. And then we went to a blockchain Web3 event. Interoperability was the biggest topic there. Of course, different nuances in meetings within. But there is this sort of thought of like, oh no, are we going to repeat the sins that we sort of perpetually do in the IT space of kind of creating these silos, these walled gardens, and creating a problem for ourselves when we want to inevitably connect those things together. I think just as a blockchain technologist, probably the biggest 3 topics that companies at large are looking at grappling with this technology is interoperability, probably privacy, and scalability. Those 3 things come up in almost every conversation that we have. And when it comes to interoperability, my personal opinion is it's very unlikely that there's one Uber sort of ledger in the sky that just everything in the world is there. I think we are looking at sort of a multi-chain kind of future, and like if you look into the permissionless sort of public blockchain space as a parallel where there's many of those, I think I could rationalize why there are good reasons to have different chains that are maybe purpose-built, maybe bound to jurisdictions, or that are purpose-built for different kinds of assets and things like that. So if you go from 1 to 2, you have the interoperability problem built in, and there's a set of problems that you need to solve. And going from 2 to 100, if you've solved those first set of problems, you're kind of equipped to deal with that. And so, a lot of what we're working with, for example, with banks that we work with is, knowing that there are, at this point, known unknowns. Can you still build a strategy? Can you still build an architecture that will withstand and still be relevant in 10 years' time? And I think that you can. If you just pull in some of the principles and learnings that we've had in IT over the last decades, things like loose coupling, splitting things into layers, being careful with how you structure the integration, and just stuff like that. And then on the standards piece, if you look just at like smart contracts and different ERC standards, there definitely are different pieces that are emerging. And there are different communities that are really trying to take these sort of primitive standards that have emerged kind of in the wild and make them fit for purpose with business. And I think we would certainly love for that to come in lockstep. rather than like 2 decades behind and having everyone trying to retrofit.
Yeah, and it's incredibly helpful to understand the movement. And interoperability is a moving target right now. I think everybody's trying to achieve that. But if we take a step back, right, thinking about the needs and desires that we're trying to address, right? So maybe Tom, I'll direct this. Maybe perhaps one of our final questions toward you is around the needs and desires, at least in phase 1, that you were trying to accomplish or address as part of the CBDC sandbox, and then where you see these needs and desires going in the future and how those will evolve into use cases for the sandbox.
Yeah, and again, we anchored everything on interoperability because it's not always the first thought or the highest priority when you're creating a new digital asset. Again, if you're a central bank, you'll have different monetary and domestic policy objectives. And when we spoke to them, we said, we understand, of course, these are your objectives, and you can, and it's your currency, it's your country, of course, you're going to design all those things. But if you don't start thinking about interoperability or what happens when your digital form of your currency goes cross-border, then you might end up in a situation that you create fragmentation you don't want. You might actually prevent the adoption of your currency because it's not connected. Our mission at SWIFT is to deliver instant and frictionless transactions worldwide. I mean, that's what we do. And we think we're in a really good position to do that. We think CBDCs are the right place to start. We've done some additional work, and you'll see more of this coming in next year as well, on tokenization, and even experimentation we've done with a number of banks and market infrastructures to connect through SWIFT, for banks to connect through SWIFT to open and private public blockchains, right? So this theme's not going to go away, and the world's only getting more complex. Remember, in the case of a central bank digital currency, nothing's getting shut down. This is a new form of a sovereign currency. So nothing's getting shut down. We're actually just adding more to that. And if we don't do this right, we don't focus on interoperability, as well as all the things we know we need to have: security, privacy, convenience, low cost, transparency. All those things have to happen, right? The G20's done a fantastic job in setting goals for the industry, which we feel like we're ahead of target of implementing. Those are all really important. But if you don't get the interoperability part right, then you run the risk of building digital islands. And then you just start building more fragmentation. And all we're doing is kind of creating the next set of problems, maybe even more complex problems now because the world becomes more complex. We're just setting ourselves up to create those problems again. And then we'll be sitting here 5 or 10 years from now saying, well, if we just would have got that fragmentation piece right with interoperability when these were designed, we would have avoided all of this, right? So I think it's a really good opportunity to bring the industry together to try to build it properly. We did start with CBDCs and cross-border payments. The next round of the sandbox is really kind of 2 streams of work. One is we have central banks have decided to run their own experiments, their own cross-border experiments. The Hong Kong Monetary Authority and the Bank of Kazakhstan are doing tests, and they're going to publish their results on that. That's something they're using the sandbox for, but they'll be publishing the results of their tests and what they learned and what they're going to do next. And then we're also adding new use cases. So a large percentage of cross-border payments are driven by the global economy and by trade. And so the trade payments is a really useful use case. We're looking at delivery versus payment for securities. We're even looking at PVP for FX transactions. So again, these are actually facilitated by SWIFT, but they're from our banks. And so it's a really good kind of window into how are the banks thinking about how they would use digital assets, to serve their customers better, which we help them do, and to be able to get access to liquidity they might not have access to today.
Yeah, that's a great response, and I think it's an amazing contribution for the space, especially having such large central banks involved, and SWIFT and Kaleido and others involved in the project. I think one final question, if I don't get yanked off here, is as far as achieving these use cases. Steve, I'll direct this toward you. We had a brief discussion around the establishment of a multitude of networks that can support different asset types, right? So perhaps you could give us a little bit more information on how these networks are designed within the sandbox and how it will facilitate use cases like DVP for securities and FX and all of those use cases.
Yeah, so I'll quickly point out a couple observations that we're seeing as trends, and Tom can jump in as well. But overall, Kaleido, the CDBC projects that we're seeing, there is this general arc where there were a couple of years ago, there were white papers, then there were some POCs. We're starting to see more and more industry-wide pilots, right, with just, a huge portion of just the banks and the FIs involved in the projects, which it's great to see that level of involvement and experimentation happening. I think one of the trends maybe within the technology layer is sort of pulling in some kind of a concept that you see from the public blockchain space where, either chains are organized into layers like layer 1, layer 2, sort of constructs where you sort of have scaling chains that are tied in to, a parent chain, or you have sort of fit for purpose networks where, for example, the assets are on one chain and the cash is on a different chain. And so you can see why interoperability in this context becomes, even more important, because a DVP is not as simple as money goes one way, the asset goes the other way. You have the asset on one chain, so first of all, the participants all need omni-connectivity into the asset chain and the cash chain. And you have this sort of meta orchestration happening where the asset moves on one side and the cash correspondingly moves on the other side. And you could absolutely see what Tom was saying, sort of the evolution that they're looking at from a Swift perspective, from messaging to transaction flows and transaction management. That orchestration then really becomes the beating heart of the whole system. You can't accomplish anything meaningful if you can't trust that bridge or that sort of orchestration layer. And I do really feel like that is the direction that we're seeing more and more focus and more of these experiments moving on towards.
With that being said, I think it was an excellent way to wrap this up. And seeing an organization like Swift, an industry leader working with a technology delivery provider that embraces open source as one of its first principles to achieve something that is incredibly useful for the space around interoperability is really great to see. So thank you both for your time, and looking forward